Welcome to weekly view on markets. Nifty lost 1.52% during this week. Major correction of 1.24% was seen on Friday. All indices and all sectors ended in the red. Weak economic data in the US triggered the correction. Long-term charts look strong and the correction is a buying opportunity. Indian macroeconomic data is coming out better every month, which will support the markets. DIIs are buying continuously and they use the dips to accumulate more stocks. This will support the market. Long-term investors need not to worry about volatility and short-term movements. Mutual fund investors should continue SIPs and correction will help them to get mutual fund units at lower prices during correction. It will benefit them in the long term. Now let us look at performance of various indices during this week. Nifty closed with a loss of 383 points, that is minus 1.52% at 24,852. Bank Nifty closed at 50,576 with a loss of 774 points, that is loss of 1.51%. Mid-cap index lost 784 points, that is 1.32% loss, closed at 58,501. Small cap index also lost 31 points, closed at 19,276 with a loss of 0.16%. India VIX, that is the volatility index, has suddenly shot up by 13.59% and closed at 15.21. Now let us look at performance of various sectors. Except consumer durables and FMC, we slightly managed to close in marginally in the green. Rest all sectors ended in the loss. There was across the board selling on Friday, which has resulted in all major indices ending with a loss during this week. PSU banks lost 4.73%. PSC, that is public sector companies, lost about 3.81%. These were the companies, public sector companies and PSU banks were the major gainers for last about 1 year to 9 months time. So they have lost heavily during this week. Energy sector lost about 3.53%. Oil and gas sector lost 3.21%. Metals lost about 2.6%. Infrastructure, auto, media, commodities, realty, all sectors lost between 2 to 3%. Manufacturing lost about 1.79%. Private bank lost about 1.40%. So this has created a panic in the market on Friday and the volatility index has gone up sharply. Now let us look at the charts. This is the daily chart of Nifty. Here we can see that Nifty after hitting 21,250 level, that is touching the previous high, we have seen a sharp profit booking and these two red candles have brought down and Friday it has closed below this major support line which I had drawn earlier. So on a short term basis, Nifty is set for some more correction as it looks from this chart. Now I will set the chart to long term, that is weekly chart. So on a weekly chart, we don't see any kind of weakness in the Nifty index and it is following this channel and it is likely to trade in this channel, and by looking at this around 24,000 is a good support level, and if due to any reason Nifty comes to at around 24,000 level, it will be a good opportunity to accumulate quality stocks. This is a chart of Nifty Midcap Index. I have drawn this support line, and even though it has corrected, it is still above this support line. So as long as Nifty Midcap Index is above this support line, I have a positive view. It may consolidate for a few more days. After that, we will see a up move in Nifty Midcap Index. This is the daily chart of Nifty Small Cap Index. Here also we can see the small cap index is still in a better shape than mid cap index, because it has corrected also to a lesser extent on Friday during this week. As long as it is remaining above this support line, that is, as long as Nifty small cap index is remaining above 19,000 levels, I have a positive view, and maybe there could be correction of 1 or 2 days. After that, the uptrend will resume in Nifty small cap index. This is a daily chart of Bank Nifty index. We can see the Bank Nifty has created a long red candle on Friday, and this is almost at the support level. If Bank Nifty comes to this support zone of around 50,000 level, it will be a good buying opportunity for the traders. They can buy at around 50,000 or 50,100 level, and they can book profit when Bank Nifty goes around 51,000. That is the range under which Bank Nifty is trading at present. Now let us look at macroeconomic fundamentals of the market. First week of September, sales figures for autos for the month of August has come out. Here we can see it is a mixed kind of figures. The overall, there is a gain of around 2.88% in the auto sector, while overall growth is there, which is a very small growth. Auto sales figures looks very flattish, and inventory levels at the dealers have gone up. And we have seen that many automobile companies have started announcing discounts to push up the sales. So this is not quite a good sign for the auto sector in the coming months and quarters. Two-wheeler sales have gone up by around 6.28%. So we can look at some upside in the two-wheeler companies like Bajaj Auto, Hero MotoCorp, and TVS. Three-wheeler sales have also gone up. This is a good news for TVS and Bajaj Auto, who are manufacturing three-wheelers. The concerning point is that passenger vehicle sales has dropped by around 4.53%. Tractor sales have dropped by around 11%. Commercial vehicle sales have dropped by around 6.6%. So these are the sectors which are driving the economy. Commercial vehicles and tractor sales is a disappointing figure, which will have impact on the rural agricultural sector, and commercial vehicles will have a impact on the industrial sectors and logistics. So the demand in these sectors are slow. That is why we are seeing that the vehicle sales are slow in these sectors. So which we need to keep a watch, and accordingly see how the quarterly results from these companies in these sectors will come in the next quarter. GST collections for the month of August has come at 1.75 lakh crores, which is up by 10% year on year. Forex rate is at 83.95. It has slightly, rupee has weakened by a few paise during this week. Dollar index from around 100 level has gone to 101.19. That is why we have seen slight weakness in the rupee during this week. RBI forex reserves has climbed a record high of 684 billion US dollars. It is up by 2.3 billion US dollars during this week. Brent crude price has dropped sharply. It is at $71.47 per barrel. Lowering crude price is a good news, and there is a speculation that government may reduce petrol and diesel prices. If that happens, the inflation will come down, and already RBI is hinting at rate cut in the coming monetary policy committee meeting. So this is a good news for the market. Gold price is steady at 71,460 for 10 grams 24 carat. Foreign institutional investors have bought 1,401 crore during this week in equity, and DIIs are continuously buying. They have bought 5,546 crore in equity during this week. Continued buying by DIIs and FIIs. After many weeks of selling, they have started buying. So DII and both FII and DII buying will support the markets. PMI manufacturing index for a month of August has come at 57.5. It was 58.10 in the month of July. It has slightly reduced. Maybe due to heavy rains and floods, industrial activity has slowed down during the month of August. We need to watch this. PMI services index is at 60.90. It is at a quite a high level. It was at 60.30 in the month of July. So August service sector has grown very well. It is in the expansion mode, and PMI figures are quite good. So we can look at better quarterly results coming from services sector companies in the coming quarter based on this data. Indian macroeconomic fundamentals continues to be strong, so investors should not worry about day-to-day volatility. They are advised to remain invested, and investors in mutual fund should take SIP route for investment. Those who are investing into the stocks also should invest in a staggered fashion instead of putting all the money at a time. And any dip in the market due to some global news and other things will be a good buying opportunity. Indian growth story is intact, and investors should plan to remain invested for long term. They will benefit from growth in the Indian economy. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.